much for joining us, Marleen, for this interview.
Pleasure.
For your chairing at the event so far. And just for our audience who are visiting the website throughout the year, we'd like to get an idea of your experience at capital creation and the trends being discussed. And firstly, are you staying in Monaco for the weekend, or what are your plans?
For the window, the weekend is too far away. I need to go to Geneva tomorrow. And unfortunately then back to London, where apparently it's hailing.
Yeah. What a shame. Have to make the most of the weather here for now.
Yeah. So whilst we're here, obviously one of the attractions of capital creation is that it's here. So that's very pleasant.
And in terms of the industry, when a company approaches you for investment, what is it that makes you think twice, and what deals would you definitely walk away from?
As you know, we do secondaries investing, and we get obviously a lot of deal flow at this point in time. There are very many LPs managing their portfolio and selling. When we approach about a portfolio, that's about 80%, if not more, that goes into the bin pretty quickly when the quality isn't high enough, when we cannot see liquidity coming up over the next few years, when we can't see the manager being stable, being able to manage out the portfolio, even if the companies are attractive. Obviously, the quality of the underlying GP is very important to us. So we'll walk if that doesn't tally. We focus very much on good quality secondaries with relatively early liquidity. So we typically invest year 4 or 5, so that we can see what's happening. And if it doesn't look like that, we'll walk.
Absolutely. I think we've been hearing that a lot as well from others in the market.
Quality matters, and there are now so many more different factors that one needs to take into account before considering an investment.
Absolutely. And what have been the main challenges for you in sourcing funds?
Fundraising, well, I was chairing that yesterday, right? Fundraising is tricky. There's a lot more. There are a lot more managers looking for capital, and there isn't enough for everybody. So one needs to be very clear. Conclusion of the day: have a clear strategy, be very open with your LPs, and LPs need to like what you do. We've had the challenge that we focus on European secondaries, and Europe hasn't been flavor of the last few years. So that has been challenging. Nevertheless, we've got a good amount of capital under management, but it wasn't particularly easy. And hopefully that will change a little bit now.
Absolutely. And a key message of yesterday was, in fact, that admitting your mistakes is key, and ensuring that you learn from those and add to your skill set. What mistakes have been made in the private equity industry recently, and how do you think the industry has learnt and moved on from those?
I think people have made too many investments that, with hindsight, shouldn't have been made, and have probably, particularly in the boom years, not been diligent enough to walk away from deals that were clearly not doable, didn't have the right ingredients, had too short a timetable to finish your due diligence, and nevertheless still did those deals. Recently, we've seen people with capital overhang needing to do deals. It's very difficult to stay disciplined if your investment period runs out. Don't succumb. And a lot of GPs have been very good in extending their investment periods if needed, if needing to do so, rather than invest the last few dollars very quickly, just in case they wouldn't get an extension. But it's be diligent and be careful.